$10 trillion moves through a single institution you've never heard of. That figure exceeds the GDP of every nation except two. More capital than every central bank reserve combined flows through their systems. Yet their name appears on no consumer products, no advertising, no public campaigns. This is not asset management. This is the operating system of global capital itself. They control voting rights in Apple, Microsoft, Amazon, Tesla, simultaneously controlling ExxonMobil, Chevron, every major energy producer. What follows is the architecture they built, and why your retirement account is reinforcing it. 1988. Larry Fink launches BlackRock with 8 employees and a single focus: fixed income management for institutions nobody talks about. By 1999, they operated the world's largest bond trading infrastructure. Then came the decision that changed everything. They built Aladdin, software that maps correlation between every tradable asset on Earth. 30,000 daily trades across 200 countries flow through this system. $21 trillion in risk exposure monitored in real time. Every major bank, pension fund, sovereign wealth fund depends on it. But they didn't build software. They built the central nervous system of modern finance. 2009. While banks collapsed, the Federal Reserve chose BlackRock to manage the wreckage. Bear Stearns portfolio, AIG bailout, Maiden Lane facilities, all managed by the same entity. As competitors hemorrhaged capital, BlackRock collected fees for cleaning up their mistakes. Crisis generated unprecedented political capital. 2020, the Federal Reserve made the same call. BlackRock received authority to purchase corporate bonds with taxpayer money. The conflict nobody discusses emerged here. They bought bonds from companies they already controlled shares in, using government funds: buyer, seller, advisor. The same institution wearing 3 different masks. This was merely the foundation layer of what they had constructed. Real leverage comes from passive index architecture. iShares division, $3.8 trillion in exchange-traded funds. Your S&P 500 purchase transfers voting control to BlackRock, not ownership to you. They vote those shares in corporate elections, while you hold the economic risk. Voting control over companies they never technically own. Largest shareholder position in Apple, Microsoft, Amazon, Alphabet, Tesla. Simultaneously largest shareholder in ExxonMobil, Chevron, ConocoPhillips. Most analysis stops at diversification. The real story is systematic control. BlackRock determines executive compensation, board composition, strategic direction. They approve mergers, acquisitions, capital allocation across entire industries. 2021, they replaced 3 ExxonMobil board members with climate activists. Not client demand, Larry Fink's unilateral decision. The mechanism absent from every MBA curriculum. Passive investing creates active control without ownership accountability. Poor stock performance still generates management fees. Value-destroying voting decisions carry 0 legal liability. Perfect asymmetry achieved. Maximum influence, minimum responsibility. Cross-ownership patterns reveal the true architecture. Every major airline plus Boeing, controlled by the same voting entity. Every major bank plus their fintech vendors, same voting control. Pharmaceutical manufacturers and health insurers, identical ownership structure. Media companies and competing streaming platforms, same controlling interest. Direct competitors would face antitrust prosecution for this arrangement. Index fund structure makes identical control patterns completely legal. Annual reports never reveal this systematic ownership mapping. Here's where it gets more dangerous. 2020 data. BlackRock supported 73% of all management proposals. They almost never challenge existing corporate leadership, preserving established power structures while consolidating control over them. Political influence operates through personnel placement, not traditional lobbying. Former BlackRock executives control central banks, treasury departments, regulatory agencies globally. Brian Dees, BlackRock to National Economic Council Director under Biden. Adewale Adeyemo, BlackRock to Deputy Treasury Secretary. Mike Pyle, BlackRock to Chief Economic Advisor, Vice President Harris. Systematic institutional loyalty placement above democratic accountability. Identical patterns across Europe, Asia, Latin America. Policy influence without democratic oversight mechanisms. If this were the complete architecture, it would be historically unprecedented. But there's another layer. Fixed income markets represent the next control layer. BlackRock manages more sovereign debt than any non-central bank institution. U.S. Treasuries, European sovereigns, Japanese bonds, emerging market obligations, primary purchaser when governments issue new debt, control over both supply and demand sides of sovereign debt markets, advising governments on debt strategy while trading that identical debt. Aladdin processes settlement data for competing asset managers. Perfect information about industry-wide capital flows before settlement completion. Information asymmetry that would trigger prosecution for hedge funds. Infrastructure provider classification exempts them from insider trading regulations. The public business model ends here. What happens next changes everything. Direct physical asset acquisition has begun. Subsidiary companies purchasing residential real estate in major metropolitan areas. Commercial real estate, infrastructure projects, natural resource extraction rights under direct control. Capital migration from financial instruments to physical productive capacity, transition from portfolio management to economic planning authority. Sustainability initiatives function as capital allocation directives, not environmental policy. BlackRock climate announcements trigger industry-wide restructuring, not consumer demand or government regulation. BlackRock capital requirements drive change. Achievement no government or central bank has ever accomplished. Direct private capital toward specific outcomes without legislative authority. No democratic accountability, no constitutional oversight, no public mandate. Financial power completely separated from political responsibility. Competitor replication faces insurmountable structural barriers. Technology infrastructure requirements exceed most institutional capabilities. Regulatory relationships for government crisis management unavailable to new entrants. Cross-industry ownership leverage requires decades of systematic accumulation. Passive index dominance achieved before competitors recognize the opportunity. Network effects in asset management create winner-take-all market dynamics. Scale attracts institutional clients exponentially. Client growth amplifies voting power accumulation. Voting power increases corporate strategy influence. Self-reinforcing feedback loop prevents competitive displacement. Individual investors cannot access these structural advantages. Sovereign wealth funds lack operational complexity for equivalent platform construction. Central banks depend on BlackRock infrastructure for crisis management. Institutional dependencies make structural competition impossible. The lesson here transcends asset management. This is institutional capture architecture. Infrastructure before investment products. Dependencies before market dominance. Regulatory relationships before regulatory protection needs. Old money family blueprint executed at institutional scale. Control infrastructure, control flows, system-wide capital allocation. BlackRock didn't build the largest asset manager. They built the most sophisticated capital allocation mechanism in history. Your last index fund purchase. They were voting your shares before settlement. Every retirement contribution reinforces this architecture systematically. $10 trillion represents capital they control without owning. Economic ownership separated from political control more completely than any institution in financial history. Asymmetric power operating beyond traditional accountability structures. The next crisis approaches, and they will be both the firefighter and the arsonist. 2008 and 2020 were demonstrations. The next emergency will be consolidation. They didn't capture the financial system. They replaced it with themselves. They didn't build the largest asset manager in history. They built the largest leverage point.